Welcome back, guys. In today's video, we will be discussing the best support and resistance for trading Forex, which are quarter points. As you can see right now, I'm on GBP and I already have the quarter points mapped out, but we will be diving into how to map them out and how you can build a trading strategy around just trading off the quarter points using price action. So let's dive right in. As you can see right now, I have these quarter points mapped out, and how we map them out is we go to the weekly time frame, and you want to go to the bottom of the weekly time frame, and you map out the first whole number on the weekly time frame where you see candlestick bodies. As you can see right here on GBPJPY, we have 127 .000 was our lowest point of our candlestick body. And we lock that in using a horizontal line. I make these lines blue, and then I make them the second level of thickness. In between the quarter points, we can zoom in some so we can see. In between each quarter point, you have 250 pips. The major quarter point, this is a minor quarter point to another major quarter point. In between each one, measuring tool out. So from this major quarter point to this minor quarter point, you have 1,250 pips. Right now, it didn't really measure out. I'll have to zoom in a little more so we can get the measurements on the higher time frame. But if we go down to the lower time frame, once you measure it out, it will be more accurate. So we have 125 pips in between each one of these, because we have 250 pips from major quarter point to major quarter point. So you'll put 127.000, then you'll go up to 128.250, 129.500, 137.50, 132.000, so on and so forth. The .00, .500s are the major quarter points. The .250s and .750s are the minor quarter points. And as you can see, as far as we go back on this chart, let's slide back. These quarter points are like a magnet for price. Even if we had the quarter points, all the way up here, which we did not need those right now, because when I put these on, the market was down here in this area. As the market continues to move up, I will add in, the new quarter points. But let's go down to the H1, and we will see how we would, trade this. As you can see, the market came from this minor quarter point, and then she fell down to this major quarter point. She came and did a fake out under this major quarter point. She reversed right back into, the major quarter point, and she's now most likely going to rally up to touch this minor quarter point again. And you can see the market hits the quarter point, reverses off of it, or breaks through a quarter point, and then finds price at the next quarter point. And you can see as we got into this quarter point, the market got consolidated. As we got underneath this quarter point, the market got consolidated and moved sideways until we had our breakout. So, and again, we can show the measurement. Like I said, on the smaller time frame, it will add up. So you got, 125 pips here that represents this major to minor quarter point. Now, how we want to trade these quarter points is we want to use price action. So we want to wait till price finds one of these quarter points, and then let price action tell us what the market is going to do. And we also use our trend line in confluence with those quarter points and price. So we draw our trend line, 1, 2, run it through. And you can see that once the market hit this quarter point, we got a rejection. We had a lower low created right here off of this quarter point. You see this candle came up. We lost steam here. We started getting wicks. Candlesticks got smaller. We had 4 hours of consolidation. Market made a lower low than this area right here of support. We had this area of support. We had this area of support. Market broke that support and created a lower low. Then we created a lower high, broke the trend line. We had a retest right back into the quarter point, making our double top at the weekly high, at the previous weekly high. Market shifted back below that quarter point. When price got back below this quarter point on the lower time frames, we would have took our entries off of the market now breaking this newfound area of support here. So the market made another double top off of this quarter point after the retest of the broken trend line. We made this M pattern, which is a double top again. We broke the neckline of that double top when price shifted through that neckline. Since we're on the 1 hour time frame, let's go back to say the 15-minute. And as you can see, when price broke through this on the 15-minute time frame, you could have took your entries here on this engulfing candlestick and then rolled this price on down to take profits here. Zoom out some, roll the price all the way down. We are here at this quarter point, and this is where you do not get greedy as a trader. The market is close enough to that quarter point to take profits, and you would have picked up 91 pips. So that's all you're looking to do to trade, quarter points and this strategy. Again, you had your 1-2 running through. The market rejected off this quarter point, made a higher high, retested back into the trend line where you could have took your entry. We did get a small retest here back into the quarter point again. So if you took your entry at the trend line, you were 13 pips in drawdown. And then, the market pushed up. Where is the most likelihood where the market is going to go to? The last area of either resistance or support based off of the previous day or the previous trend. The market trended down from this day, 1, 2, 3 days. So we had a 1-2 day trend. It broke out on the second day. We had a retest of these lows and this quarter point on day 3, and then the market shifted away. Where's the likelihood that the market is going to go to before the market makes a move either to continue to hit that quarter point or to come back down and continue this downtrend or to retest this quarter point again? It would be right here, this lower high. We had this market shift away, lower low, or actually lower low, lower high, lower low. So you can see here, put a rectangle tool on, and we drag this across. The market came right up off of this broken trend, rejection off the quarter point, retest entry, and then we want to look to take our profits here. So from our entry to here, you would have picked up 56 pips, which is a beautiful move. Again, here, we had our 1-2 running through. Market gave us a fake out to trap the sellers, to push them into a liquidity grab. The market reversed. We had our retest candle right here, which was your entry of this retest candle. The market got back above this quarter point where you could have either took another entry right here, or this could have been your first entry because price made a higher high and an engulfing candle. And where's the likelihood that price is going to go to again? Price came right back up to find this level again. And then again, as traders, we don't get greedy. Market is close enough in price to this level again, and we took our profits here for another good gain. We got entries either here for 76 pips, or we got entries here on this engulfing candle for 67 pips. That's all you need to do to trade this strategy. Again, you go to the weekly time frame, you mark up the candlestick bodies to the low. As you can see, the market fell, retest, hit this area, bounced, we retested it again, bounced, retested again. It's a major quarter point, minor quarter point, major quarter point, minor quarter point. And as you can see, I break up my major and minor quarter points with different horizontal trend lines. So I make this a solid blue line, and then I go down on the horizontal trend line, and then I make this I believe this is the fourth selection down, and then you mark your screen all the way up to as high as you want to go, as high as you want to see price go. You mark your quarter points up, and then you just simply trade. Once the price gets to a quarter point, then that's when you look to make a trade. You use your trend line and your market structure to find entries off of the broken trend and the rejections at the quarter points. Again, broken trend, rejection at the quarter point. Every single time. Again, right here, we had a downtrend. We had a rejection of the quarter point. Market was trending up and made a level of support here. We can put that level on there so you guys can see it. We had a level of support here that the market made off of this low. After we redirected the quarter point, market was trending up. We found downtrend right here with this consolidated move. You could have also made these little moves to the upside. You had a downtrend here, broken trend, market broke through, got our retest and hit the quarter point. Retest entry off of the quarter point and broken trend line, pushed up, and you would have got a good 78 pips, which is a good move. Again, you could have got this downtrend as well here. You had your 1-2 running through. Market got a double bottom off of the previous day's low, retested the previous day low here again. Also, this previous level of support, market broke through on this candle here. We got a retest and then an engulfing of this candlestick body, and the market pushed up again. So this is all you need. You take the profits at the QPs. We got a retest again, 1, 2, 3, back into this low. The market could not create this a lower low or get back into this level of support. We broke our trend line, and then the market rallied up to hit the next quarter point. And as you can see, right when we got to this quarter point, we got an area of consolidation. We made a lower low here, lower high, and the market shifted back away to get to this quarter point. And again, as a trader, we are close enough to this quarter point to take profits. You don't get greedy. You take your profits when the market gets into the vicinity of your quarter points. That's all you need to set up the quarter points. And as you can see, this works on every single chart. We have GJ, we have GU, same thing, same rules apply. We have gold, same rules apply. We also have US 30 and the same rules apply. Mark up your quarter points, guys, and you can use this as a very profitable strategy to use, because it gives you something to look at, it gives you something to gauge, it gives you something to be able to sit on your hands and say, hey, the market is caught in between, a range right here in these quarter points. I'm not going to look for entries to make any decision on taking a trade on any chart until the market touched my quarter point. So if the market was ranging in between these quarter points, like this candlestick here, let's find some little choppy noise, like the market broke through, came here, we had this little choppy noise coming off the quarter point, we had all this range here, retesting this quarter point. I'm not going to trade any of these candlesticks until the market gets down. We tested this quarter point, and as you can see, we had our trend line here. Market broke above. We had a retest of the quarter point again. We engulfed the downtrend and got back into the major quarter point where we would have took our entry off of this double bottom or this previous day's low. Simple stuff, guys. Simple rules to follow. If you follow these rules, you can be consistently profitable off of this strategy alone, just trading quarter points. That's all you need as far as support and resistance on your charts. You don't need anything else. You don't need supply and demand. You don't need no support and resistance line, just trying to find price anywhere. All you do is mark these quarter points on your charts. Once you mark the quarter points, they work for any charts, any instruments, stocks, commodities, Forex. Does not matter if it has candlesticks. You can find the quarter points. You mark them off. You don't need any moving averages. All you need is the quarter points, trend lines, and broken market structure. Retest entries of the quarter point or of the broken trend, and you take your entries, and then you look to take profits at the next quarter point. So this was a quick, short video showing you how quarter points are magnets for price. As you can see, as far as we go back, the market is going to find these quarter points. It does not matter what chart, the market is going to hit these quarter points before it decides to make a move in the same direction as the trend or reverse and makes a trend reversal. Does not matter which chart you're on, the market is going to do the same thing. So that's all you need. This is a quick video on how to use quarter points, how to use trend lines in confluence with those quarter points, and use market structure in confluence with those trend lines and quarter points to find entries and to take profits in the market. So take this video, dial in on it, learn how to mark up the quarter points. Once you mark them up, back test this over and over and over again, and use this to your advantage in the markets. So thanks for watching this video. You guys like, share, comment, and subscribe. And I will be dropping new videos every Friday and adding them for you guys to be able to use these in the markets to become more profitable and more consistent as traders. So again, guys, thanks for watching, and tune in next week and you will get another video, and all these videos will tie in with each other where you can use all of these videos as confluence when you're marking up your charts. You can use everything that I'm going to put together on these videos as confluence to have more confidence in your trading strategy when you use the information that I'm giving you in each video. So again, thanks for watching. I hope you guys take this and you use this, because it is some dynamic stuff. It works. I trade this way. I use it. I'm profitable this way. And this is literally all you need, and you can build a trading strategy just solely based around this. So again, thank you. I'm Daniel Hardman, and this is, again, Hardman Withdrawal Investing Group. And, welcome to the channel, and keep coming here to engage into this knowledge, learn this knowledge, use this knowledge, and grow, as a trader with this knowledge.